Thank you for joining me. I'm Alexandra, and I want to talk about. I don't really want to talk about Ford, but here we are. So, what they do is they build cars, or, basically a truck and miscellaneous other stuff. A majority of their profit is from the F 150, or, profit is said too much, but more on that later. So, obviously, they have a truck, and if they stop doing anything else, they would not be too much worse off. So it's the F-150 Motor Company at this point. Current stock price $11.70, which gives them market cap of $46.6 billion. Revenue $127 billion, which is down like 30 billion almost. Not great. Earnings negative $1.3 billion, which gives them a PE of negative 37, and the previous year was 47 million in earnings, which would have given them a PE of 1,000, which is also not great, but better than minus 37. Dividend is zero. I do expect that to change, especially if they can hit that forward PE. They stopped their dividends before/because COVID. So obviously it might start again fairly soon if they can, hit some revenue and earnings targets, but might be a couple years. Personally, I would wait a couple years, but I don't own Ford, so that's not going to happen. Total assets $267 billion, total liabilities $236 billion, which gives them a total stockholders' equity of $30 billion, which honestly isn't that bad. With a market cap of $46 billion, $30 billion is nice. It's definitely not terrible. So, as far as risk factors go, obviously people, at least in this country, are not going to stop buying F-150s. But there's a few competitors that are going to build electric trucks this year and next year. So you have Rivian, who is going to come out with their truck this year, I think. You have the Cybertruck next year. Ford is trying to build an electric F-150, I think, but I wouldn't be surprised if they were dragging their feet. So as a work truck, I think that I would prefer an electric one because you need to, generally, if you use it for work, you need to more haul stuff than go long distances, which is why currently they don't really care that much about the gas mileage, but they also would get away with a fairly small battery. So electric work trucks really make sense. It doesn't make sense for the people who buy them to like drive long distances, which somehow people do. I don't understand that, but overall, I would say that electric cars will be a risk factor, but they're not in the truck segment yet. And so that's not really a big problem for Ford yet, but it's definitely coming. But if they can throw something on the market, even if it's terrible, I think that for the people who buy one F-150 after the other, they will definitely get into the Ford rather than Cybertruck. Most likely anyway. So overall, for a growth investor, obviously currently huge negative growth. Generally fairly small and steady growth, but we kind of just need to get back to that level first. For a dividend investor, there's currently no dividend, and buying a stock for a potential future dividend is probably not the right play. So I would probably just wait and see what happens, but they did have 15 cents dividend per quarter, which, 6-ish, maybe more, 7%, something like that. So if they start a dividend again, it's going to be quite lucrative to buy it for the dividend, but it's still going to take you 15-ish years to, break even if they ever totally go broke, which it's not going to happen soon, but it might happen. If they can throw something electric on the market, it's probably not going to happen. So it's a reasonably safe investment for that. For a value investor, obviously the current PE is total crap. The forward PE is pretty nice. The balance sheet is pretty nice, even though it's fairly balanced, but they have a huge number of factories and factory equipment, so that makes sense. So if they can hit that forward PE target, which I kind of doubt that they will, because that's $6 billion in profit, and that hasn't happened since 2017. So overall, I think that's kind of shaky, but even if they could get back to the 3.6 billion that they had in 2018, that would be a decent PE and probably a reasonably safe investment, and probably a dividend at some point. So if you were a value investor and you wanted to invest in this, then I think that it's not a terrible investment, and you should definitely look into that and maybe kind of come up with your own forecast of the earnings, because I don't really think that forward PE of 8 is really feasible. It's definitely not likely. COVID is still kind of going on, and there's a lot going on in the world, and relying on a forward PE of 8 for a company that hasn't hit that earnings in 4 years is optimistic, is how I would put that. So that's it for me for today. If you like this video, make sure to subscribe. I'm putting up more videos every day before market open. I hope you have a successful day.